Ladies and gentlemen, I'm going to introduce someone else now who's very experienced in the market, and his name is Tom Busby. His trading career dates back to the late 1970s, quoted and published in the Futures magazine and Active Trader magazine. He actually actively trades and invests in futures, stocks, options, and currencies. Guest appearances include CNN, First Business News, MoneyShow.com, and Steve Crowley's American Scene Radio, recognized as one of the first educators to trade live in front of an audience. Tom authored Winning the Day Trading Game, The Markets Never Sleep, and Trade to Win. Tom founded Diversified Trading Institute in 1996, and with more than 30 years of his trading experience, has helped thousands of students become better traders. Now, ladies and gentlemen, Tom Busby.
All right, DTI was founded in 1996. We're located in Mobile. There's risk, and you've seen a lot of disclaimers, but the bottom line is you have to assume responsibility if you're going to invest in the market. This is for big girls, big boys. DTI, we started the school with the concept that I thought that people could do better managing their own money, and we were in pursuit of teaching them how to do that, and we've done that for all these years, showing people what we know about the market, our team, and how that team insights can help you do better in the different opportunities you have in the market. It still boils down to your ability to execute after you know what to do and have the confidence to execute. Here's a picture of our building. We built this, moved into it in 2001. In 2001, our first class we held there, I can remember to this day, we didn't even have grass out front. So we do have grass now. The top floor is developed. We have about 10,000 square feet devoted to you, the trader/investor. I am a member of the world's largest exchange, the CME Group. Been a member from the time we were private until we went public. I've been around a long time. I've been trading the S&P since 1982. I remember my first trade in the S&P and all the changes that's gone on since 1982. As I said, we started DTI in 1996, and we're still in business and we're still going strong. 3 books. One was mentioned, Winning the Day Trading Game. That's in 11 different languages. It's a bestseller. It tells my story, how I got involved in the market, what I didn't know, what I was trying to learn, and how I was able to take what Wall Street was saying and really be a contrarian to that to succeed. So Winning the Day Trading Game is, I think, has a lot of good tactics in it about all the different markets, and people tell me it's one of the best trading books they've ever read. Here's some books I like outside of my books. Think and Grow Rich from Napoleon Hill. I like the attitudinal thoughts that put you in the right frame of mind to trade. A lot of history can help you out. A lot of traders look at history. What I look at is what worked, what didn't work, and what would still work today. I will tell you, Chapter 12 of How to Trade in Stocks to this day is the best chapter I've ever read personally as a trader on how to trade in stocks. Chapter 12 in this book is fantastic. It's written by Richard Smitten. The Stock Trader's Almanac, I'm an avid supporter of the Stock Trader's Almanac. They were bought by Wiley years ago, but they still put out a good product. I use this daily. It helps me remember things. It helps me think about the future, and it's really got a lot of good insights about the market. The last book is 21 Irrefutable Truths of Trading. Another friend of mine wrote this one, but it tells us about what are the traits that successful traders and investors have. What are they able to do that other people can't do? When 5% of the people make money, 95% of the people lose money, you really need to study what works and what doesn't work. And might as well get it out of a book like the 21 Irrefutable Truths of Trading. All right, now here's something new that we brought out in 2013. I'll give you a second to write this down. we're able to be in your pocket now. And we have our world-class software. Is button number 3. It says the roadmap there. But download it if you got an iPhone or if you got an Android. Go to their store, download the app, and then send me an email and tell me what you think. People really like it. It helps you keep up on the market. For example, you'll be, if you sign in, you'll find out next week in the market has a 60% probability of being higher, and that might help you in your investments next week. This is one of the things we'll put out in the app on Sunday night. Now, Adam just typed in how to go there and get the app. Everybody got that? And I'll move on to the next slide. 1987. Wow, 1987. A lot of you probably wasn't trading back then, were you? Well, I was trading, and that was the year and the day that changed my approach and my life as far as the market goes. Warren Buffett's got that rule, rule number 1 and rule number 2, and that in a fantasy world, that's a great rule, but you are going to lose in the market. You are going to have losses in the market, and how you handle those losses, is how you're going to succeed. In 1987, it's in the first chapter of my book, and I believe if you go to Amazon, you can get a copy of the first chapter, no charge. But the first chapter I talk about, in 1987, I was arbitraging. That's taking advantage of markets, very sophisticated futures markets versus options market, and had a pretty good racket going for a lot of years. And then 87 came about. And I will tell you, what I learned out of 87 was a couple tenets that are true today. Number 1, continually educate yourself about the market. Do not stop being open-minded. That's number 1. Number 2, I will tell you, associate with positive people. In fact, it's almost a part-time job doing rule number 2, associating with positive people. Number 3, have an approach that works in an up market and in a down market. If you only play one side of the field, you will not succeed. You have to play both sides of the playing field, and that means being able to play when the market goes up and being able to make money when the market goes down. I think you got a little insight to what happened Friday in the market when we fell about 2.5% in the market on Friday. How fast it can happen, how fast good stocks can turn bad, and how your portfolio can shrink in value. You got to know what to do when those events occur. Now, you got to be persistent, and I always study what I do. I study exactly what to do. And here's one that you got to be able to just train your mind to do. You can't worry about yesterday. Focus on the present. Educate yourself, and the uneducated people will lose to you if you educate yourself. Risk management is your first priority. Don't risk money you can't afford to lose. And try to analyze and critique what's going on, because the market's a combination of everything that's happening, and you will see the answers if you're unbiased. Now, a lot of people have problems with fear in trading. Their fear of loss, fear of succeeding. There's a lot of things you can do to overcome the fear that you have when it comes to pulling the trigger and getting into the market. Fear really is false evidence appearing real. Here's how I overcome fear. I never will say I can't do something. I'll say, let me look at it and let me see what is the best path and the least path of resistance to accomplish my objective. Okay? I know that when I go out onto the playing field, onto the market, I'm subject to have losses. So I deal with it up front. I know if I do have losses, they'll be part of my overall structured approach. I have confidence in what I do. I don't trade unless I got confidence. I always look for the positive side of the trade. And the way I do that is I take the risk out of it by saying, this is how much I'm going to lose on this trade. I accept it before I go to the step of winning. And that's the way I do it. Now, as long as you know that that fear is there and you don't disguise it, you can deal with it. How many of you have ever put on a trade, and as soon as you put on the trade, you go, oh no, I shouldn't have done that many contracts. I shouldn't have done that particular trade at this time. How many people's done that? And then when you do it, you go, oh, let me just jump out. And then you jump out, and as soon as you jump out of that trade, it turns around and goes your way, and you go, well, let me get back in. Then you get back in it. And then those fearful thoughts come back on when it has a downtick, and you jump out again. Before you know it, you've been in and out 4 or 5 times, and guess what? You probably lost some money because you didn't follow a plan. That's what planning will do for you. And I can show you how to plan a week in the market that will help you win. Use fear to avoid those kind of mistakes. Now, how do traders get past fear to be successful? The way I do it is I write out a plan, and I do it every week. I do it every Sunday night at 8 o'clock. I do a plan for the week. And I use tools to help me with that plan. Let me show you some of the tools. Because these tools are benchmarks to tell me whether I ought to be long, whether I ought to be short, or whether I ought to be out of the market. Now, we developed this software many years ago. It tracks the market 24 hours a day. We do not sit in front of a computer. We track the market and look for the key times that we need to make decisions. Now, I want you to write down a couple numbers, and if you don't get anything else out of what I say today, I want you to watch how this works. If you follow the S&P, the S&P on Friday closed at 1780. If you follow the S&P, it closed at 1780. If you see the S&P 1 hour after it opens up, this is S&P futures, after it opens up on Sunday night, go above 1787. 1787. That's one check mark for the market going higher. Okay? Remember that number, 1787. If you see the NASDAQ go above it, they had a low of 3527. If you see the NASDAQ go above 3540 on Sunday night, 1 hour after the market opens, then you're going to see an up market. Now, if you look at the next 5 days in the market, I'm talking about the next 5 days in the market, there is a 60% probability that the next 5 days in the market are going to be higher. Your first clue is those two numbers I gave you. Does everybody have those two numbers? And where do I look to see their comments? I'm looking here, and I really don't see the comments on those two numbers because I wanted to leave here with those two numbers looking in the next week. That's going to kick off higher prices. Okay? Okay. So that's what I'll be looking for Sunday night, and I'll be able to tell that after an hour after the market opens. Now, this is my roadmap software. If you look up here, you will see this is an old print of it, but you see back when the market was at 1669. But notice we have an ETR line where it tracks the market every 30 minutes looking for those short-term trends. We have the Seven Sisters, which tracks the global markets. That's gold and bonds and crude oil. The German market, E-mini, Dow, and NASDAQ. We have 5 IR stocks. These are stocks I trade live every Tuesday. Google, Amazon, Netflix, Visa, and Apple. And then, of course, we have other markets that we follow. Down at the bottom, we have what we call the horse race. This helps me have early indications of stocks moving up or down among their peers. It's a great filter and a great tool. And then, of course, you got the indexes themselves to tell you about basic trades. For example, you look there and you see CLU, that's crude oil. Crude oil starts moving up like that, then I would go look at maybe an Exxon, a BP, or an oil stock like that to do a play on. That's how you go from the futures to the stock to the options. That's the way you work it. And this goes back years ago to the Livermore method, but this is it electronic. And then, of course, our compass charts. If you look there, we have the E-mini and the DAX. I talked about Sunday night looking for the market to get higher than 1787 and 3540 on the NASDAQ. I will be watching it on charts just like this Sunday night for that to occur, and you'll see it go into the top half of what is known as the buy zone, and let me know, hey, the probabilities for the week are starting. That's what I'll be looking for. That's how you use these tools. These are tools that we created years ago to have an advantage over Wall Street, and they work. And you can trade anything. It doesn't matter whether it's stock, futures, options, currency, or anything. You always do it when the probabilities are in your favor. All right, here's some key features that I just mentioned when I showed you the picture. That's the custom page. Notice I got the opening in the first column. I have the last in the second column. That tells me who's winning or losing on that 24-hour period. In this case, if I was looking at Netflix, you look at Netflix today, it's about almost 400, but look at it back here when this was taken. 245 to 254. That would be a positive reading, and one would make me want to be long Netflix. The ETR page tracks the market 24 hours, and it does it in such a way that allows me when these trends are solid. The Russell there. In July of last year, look at that, 1,030, 1,030, and the Russell today is way up. Matter of fact, that started the rally that we're in now, back in July. There's the compass again, blown up. You notice that we got some key metrics over there. No matter what's dialed in, you have the average true range, you have the monthly open, you have the 5-day high, 5-day low. If you look at it today, you'll see we're right on the 5-day low. And I talked to you about how to determine when it's going to turn bullish using those mathematical insights I gave you. 7 points for the E-mini, 11 points for the NASDAQ. This is how you succeed in a moving object like the market. The horse race, we'll have it on and live Sunday night. And be ready to go. But this tool is an amazing tool for analysis. Now here's the railroad tracks. Let's go down to 1780 right now. Everybody finds 1780 under the E-mini there, 1780, actually 1781. Everybody see that? Now, how can you make money off information I just gave you? Let me tell you how you can make money. Okay? So, let's assume the indexes do turn bullish Sunday night or Monday morning. And the E-mini goes from 1781 to 1811. Everybody see that? That will translate on a stock like Apple Computer 545 to 557, which is 12 points, which is quite an advantage to know this in advance before it happens. So the buy signal enters the field about 1787. Apple Computer Monday morning is bought, and Apple Computer will soar if we make it to 1811 to 557. I would expect to see that probably and I'll walk you through it if it occurs. That's what I'm going to be looking for as we transition from futures Sunday night to the actual stock market on Monday morning. This is what we call the railroad tracks inside the roadmap software. Pretty neat tool to be able to relate all the markets you want to trade to the evening. All right, my approach in the market. There's seasonal markets that you got to know the trade. Let's talk about some of the ones coming up. February and March, you start looking to go long crude, which means the way to play that is find a good oil stock. I have one. It's called BP, and I'll be looking to enter it next week. Okay, but I will be playing the seasonal trends when the price action supports what I'm looking for. And if you talk to me 3 weeks down the road, chances are I'll be long BP. Okay, but I use these seasonals. Okay, soybeans are very bullish in February and March if you trade soybeans. Now, what I do is I look at the news that's coming up. Next week's a big news week. What's the big event happening on Monday? Does everybody know what the big event happening Monday at the close of business is? What is it? Apple earnings. That's Monday. But what happens Wednesday? Our federal government will have the Fed meeting, and the Fed meeting is very important to deciding the actual trend of the market. You'll find that out Wednesday at 1 o'clock. And you got to know about these events to plan your own schedule. Now, every Sunday night, I host a meeting at 8 o'clock on Sunday night. The reason I do that is all our subscribers and all our students come there, and they get to see what I look at for opportunities that are going to happen next week. They will tell you it's probably one of the most valuable 30 minutes they spend in a week is we lay out a good plan to overcome that fear, to have the confidence to take advantage of what happens. And I think of the market 1 week at a time. And tomorrow night at 8, I will release my plan for next week, and that's what I'll trade over. Simple, straightforward. Last Sunday night, I told people in there with me that this week would be the weakest week of the month. If you followed the market, my people knew that Sunday night because I showed them how to get it. I said, plan on it, lighten up, it's coming. You ought to see the emails I got Friday from people saying, Tom, how much money they saved by being there Sunday night. Now, that's what the Dow did. Pretty ugly for the week, wasn't it? Now, let's look at next week. These come out of the Stock Traders Almanac. I'm missing a C down there at the bottom, Adam. But if you look, Monday is a so-so turnaround day. But look at Tuesday. Everybody see Tuesday there? What do you think that might make Tuesday so bullish when it comes to the NASDAQ? What happens Monday afternoon at 3:30? Apple reports their earnings. So all this plays into the fact that you're probably looking at higher prices on Apple coming into Tuesday. Now, this is for the last 21 years. So you look at this stuff and you start learning these trends. If you look at next week, it ought to be a pretty good week for the NASDAQ. It ought to be a pretty good week for the S&P. In fact, the average for the week is about 60%, which tells you it should be an up week next week. And you got a couple things playing into Friday. I don't know if you ever heard about the January barometer, but the January, as January goes, so goes the year. So next week's an important week for a lot of people that follow this, and important for me. I want to see the S&P above 1837 at the end of next week. Well, for the S&P to go above 1837, it's got to have an unbelievable rally from 1780 to 1837. It's got to gain 57 S&P points. That's going to be a hard mountain to climb. The reason I want to see that, because if it does, then that means this year has an 88% probability of being higher. Now, it's okay if it doesn't, but the point is that you got to know what people are looking at. It's been in this business for 25, 30 years. This is what they'll be looking at and focused on come Friday at the close. But that's a big hill. So keep in mind, as we go through next week, pay attention to what's happening relative to the S&P futures. It's going to tell you a lot about how to play February. We'll get our answers next week. News next week, I told you about the big day on Wednesday, January the 29th, the Fed meeting. We have other news, but that's the news I'm going to focus on is Wednesday. So, don't sit in front of the computer. I wouldn't tell you to do it, but you got to know when to be there. 1 o'clock next Wednesday is the time you want to be there, okay? And Friday at the close you want to check.